All right, let's dive into the part of the course that talked about putting everything we've learned together. This is the strategy. So I'll be teaching you a particular strategy, and these things I'll be teaching you this strategy are based on the things you have learned previously from the previous video. So we'll go straight to studying the rules of the strategies, and then we would do a little back testing on the strategy. So what are the rules of the strategy? The first rule is that we would find a 4 hours FVG. That's the first thing. The second thing is we'll wait for a retracement back to the 4 hours FVG. And the third thing is we would go to the 5 minutes time frame. On the 5 minutes time frame, we would wait for a 5 minutes FVG. Then we'll make our entry. And our profit target will be 1:3. So we'll be reaching 1 to make 3 on the trade. So how does this work? I'll go straight to the chart. And when we get to the chart, the first thing we'll be looking for is an FVG on the 4 hours time frame. So what does this mean? We've learned about FVG from the previous videos. So right here, I see an FVG. So I'm just going to replay the market from here. I'm going to play the market from here. So right here is the 4 hours FVG. Like I explained in the previous video, FVG is the space between 3 different candles. So we have this candle 1, candle 2, and candle 3. The space between the 3 candles is regarded as the FVG. So we would mark this area. This is our FVG. So what are we looking for? We will follow the first rule of the strategy, which says find the 4 hours FVG. So we have found a 4 hours FVG. This is the 4 hours time frame. So here on the 4 hours time frame, we found the 4 hours FVG. The next thing said we'll wait for a retracement to the 4 hours FVG. So what does that mean? What that means is this is where price is currently. We expect price to retrace back to the 4 hours time frame for us to look for a selling position. So here is the 4 hours. Here is the 4 hours FVG. Before we go to the lower time frame, which is the 5 minutes time frame, we would wait for a retracement to the 4 hours FVG. So let's see. So we have the retracement now to the 4 hours FVG. At this point, we can go to the 5 minutes time frame. Here we are on the 5 minutes time frame. Now, what's the next thing we're looking for? Price has reached the 4 hours FVG, which is this shadow you can see here. We would look for an FVG here on the 5 minutes. Once we find an FVG on the 5 minutes, we will take our entry into the trade. So right here, we have an FVG. FVG is the space between 3 candles. So this is the FVG on the 5 minutes. So we will make a sell entry from the FVG. Our stop loss is going to be above the high where price got to previously, and we will target the 1:3. So this is a 1:3 risk to reward, and then we'll play the market. We wait for price to take us into the trade. And when price takes us in, we will wait for it to go the direction we have sold. So we have been taken in. The position has triggered. Now price is moving towards our direction. So we want to see price get to take profits or our stop loss gets hit. One out of the two. It has to be one. So right now we see price moved all this way down. Well, let's see. It has gone back to the entry. So let's see if it will come take us, if it will go to take profit or hit our SL. Okay, let's see. It looks like our SL got triggered. So we see price taking us out. See price taking us out on a loss. So this is a trade. We lost this particular one. But before we lost it, mind you, price has done at least a 1:2. Okay. So price did all of this before it took us out. So the rules of the strategies are very simple. So let's go back to the 4 hours time frame and look for another trading opportunity. So here we are on the 4 hours time frame. What else are we looking for? We are looking for the 4 hours FVG. When we find the 4 hours FVG, we would wait for a retracement on the FVG, after which we would go short on the pair or long, depending on the case. So we have I can see another FVG here. So I'm just going to take out price from. I'm going to take out price from here. So this is the 4 hours FVG we have here. Okay. So this 4 hours FVG, what are we looking for? I want price to come down and take. We want price to retrace back. We want price to retrace back to the FVG. After price retrace from the FVG, we will look for a buy. It's that simple. Okay. So let's play the market and wait for the retracement. So price went all the way up and came back you can see it came back at this point. Price came back at this point and tested the FVG. So we can go to the 5 minutes now and look for a buy entry. So on the 5 minutes time frame, this is the test. We can see an FVG already here. This is the FVG. So we'll take our entry from here. We'll buy. We'll keep our stop loss below this low. And then we'll aim for a 1:3 risk to reward ratio. So this is a 1:3 risk to reward ratio. And then let's play the market to see what happens if we get triggered or we don't have a trade at all. So we finally got triggered. Price has come to take us in. Now we're waiting for price to move towards the direction of our take profit, and that is exactly what price is doing. So it's move all the way up. There's a rejection, as you can see. So, and boom, our take profit got hit at this point. So we want this particular trade. So we wait for following the rules of the strategy is very simple. 4 hours FVG, retracement on the 4 hours FVG, go to 5 minutes, look for an FVG. The first FVG that forms on the 5 minutes becomes your entry for the trade. You either buy or sell depending on the kind of FVG you have found. So let's go back to the 4 hours and look for another FVG. So here on the 4 hours, we are looking for an FVG to form. So I already found one. So here's what we have. This is an FVG, and price is currently on the FVG. So there's no need to wait for a retracement. We'll just go to the 5 minutes time frame. Right on the 5 minutes time frame, what are we looking for? An FVG to form. Once we find an FVG, we will take a buy, because this FVG we have found is pointing the direction of a buy to us. So we just found an FVG right there. Mind you, the larger the FVG, the higher the probability. So we just found this FVG, so we're going to take our buying position from here. Our stop loss below this low, or below this low, this is okay. And we will target the 1:3 risk to reward. This is 1:3 risk to reward. Let's bring it down a little bit. That's 1:3. So let's play the market. We hope hopefully price comes down to take us in. It hasn't taken us in. We're still very far from it. It has moved away from our position. So let's see if price comes and take us in. At this point, price has come to take us in, and now it's moving towards our direction. Let's see what happens if it goes to take our TP or comes back to hit our stop losses. Our stop loss. So now see price moving towards our direction, doing a lot of back and forth, a lot of struggling. Okay. So at this point, this is where your patience will be tested. You just have to wait for price to do what it wants to do. So price actually went against us, but at this point, I think it's now coming back to its senses, going our direction, and finally almost at our TP. And finally, our TP got hit. So we also won another trade. This is another trade we just won using the same strategy. So the rules are simple. You go to the 4 hours time frame. When you get to the 4 hours time frame, you look for an FVG. After you find the FVG, you wait for a retracement of the FVG. After the retracement of the FVG, you go to the 5 minutes time frame and wait for the first FVG that forms. That FVG becomes the direction in which you're trading the market. So we have this FVG here, which is a bearish FVG. So I'm going to cut out this part of the market. So from this point, we expect price to retrace back to this FVG. After the retracement, we want to go to the 5 minutes time frame, look for another selling FVG, bearish FVG, then we'll take a sell to wherever our take profit is going to be. So let's see if we get a retracement to the FVG. No retracement, price has gone really far. So this is not a valid move. We'll move from it and look for another FVG, another opportunity as it regards the FVG. So let's look at this. I can see an FVG form right here. Okay, so we have this FVG. This is an FVG that has formed right here. On this FVG, we likely want to see a retracement. We want to see this candle being covered. We want to see price coming back to the FVG before we make a buying or selling decision. Good. At this point, we have price retrace back to the averaging. We want to go to the 5 minutes and look for a bullish average to form in our direction. Once we find a bullish average, we will take our entry. So let's see if we get a bullish average. So let's wait. We'll always learn to wait because that's what the game is all about. So we have this average formed around here. There's an average here. This is a bullish average, just exactly what we're looking for. So in this case, we'll just take our buy entry. Sorry. We'll just take our buy entry. Our stop loss below this low. Okay, and then we'll target the 1 to 3. Target the 1 to 3. Then we'll wait for price to do what is in this month. We got taken, and price is weaving and moving up and down and heading towards our take profit. So let's wait and see what price does at the end of the day. Okay, after going our direction, it came and took us out in loss. After taking us out in loss, it finally went to our direction, as you can see. So this trade was a loss. Okay, so it's a very simple strategy. The rules are very simple. All you need is the 4 hours average. After the average, wait for a retracement to the 4 hours average. That same 4 hours average you have found. You go to the 5 minutes time frame. You look for an average. Okay, so what determines if it's going to be buy or sell is determined by the average you have found on the 4 hours. In this case, we have a bearish average. So of course, we're looking for a sell. This is a bearish average. So if we wait for a retracement back to the average, which is what we have here, okay, when we get to the 5 minutes time frame, we'll get to the 5 minutes time, we're looking for a sell because what we found on the 4 hours is a bearish average. So here, what we'll be looking for is we're looking for a bearish average, like I've just said previously. So once we found the bearish average, we would go in. Well, we have an average formed right here. We have this average formed, so we would mark the level. After then, we'll take a sell entry from here. A stop loss just below this one. 1 is to 3 is to reward, and we are good. So we'll play the market and see what the price does. Back and forth, back and forth, back and forth, and boom, it's our take profit. So this is how simple this strategy is. All you need for this strategy is just a 4 hours average. You wait for a retracement back to the 4 hours average. After the retracement, you go to the 5 minutes time frame and look for an average to form, and then you make your entry on the average. You 1 is to 3. Okay, it is always good to backtest strategy before you start trading. That's why I recommend backtesting. Please follow the rules of this strategy and try to backtest what I've just explained to you now. Backtesting is very important for all of my students. I make it compulsory. So you should learn to backtest. The more you backtest, the better you get. Yeah, the better you get at what you do. So backtesting is a must for everyone. All right, see you in the next video. Do have a wonderful day. Bye.